You're booking clients, your revenue is growing, but your bank account still says nope. Sound familiar? You're not alone, and today we're unpacking why that might be happening and how to fix it. Hey y'all, I'm Jamie Trull, your favorite CPA and profit strategist, and here on this channel I like to bring you all the content to keep you informed, organized, and profitable in your business, so please make sure to like and subscribe. And if you feel like you're doing everything right in your business, but you still feel broke, this video is for you. And make sure to stick around until the end because I'm going to tell you the biggest mindset trap that keeps entrepreneurs in that cycle. And that one little shift could make all the difference. So one main reason you may feel broke in your business, even though money is coming in, is the very, very simple equation that revenue does not equal profit. Right? Revenue, i.e. the money coming into your business, is different than what is actually left over to pay yourself. And just because money is coming in, it does not mean that it's staying. Now, I feel like in this day and age, we're inundated with all these messages of these businesses that seem to be doing so great. They're talking about being a 7-figure, 8-figure, 9-figure business. And that might make you feel like you're doing something wrong. However, the thing that those businesses rarely disclose is what their actual cash profit is. How much is actually available for those business owners to pay themselves at the end of the day? Because those businesses might be bringing in, let's say, $1 million. They might actually be a 7-figure business. But what if their expenses are $950,000 before paying themselves? That means they're left with just $50,000. So if you're a solopreneur without very many expenses, making $50,000, you might be doing just as well as someone who's making $1 million in revenue. Revenue does not equal profit. And revenue does not necessarily make for a healthy business. Now, obviously, you need revenue in a business. I'm not saying you can have a business without it, right? There's no money flowing in. It's not really a business. But the second part of that profit equation is expenses, right? Revenue minus expenses equals profit. Profit is what tells you what you can pay yourself as an owner. Okay. If you're spending all your money in your business, and when I talk about expenses, I'm not including owner salary in there, just to clarify. If you are spending all your money in your business before you pay yourself, you're not going to have much left over to actually compensate you for the work you're putting in. So there's a lot of different things that could make it such that you don't have much left over at the end of the day. First and foremost, you might have high direct costs. So those are things that are specifically related to the good or service that you're selling. So think of it as the cost of goods sold, right? If you're buying and reselling products, that's the wholesale price that you're paying. Or if you're in a service business, that's the value of your time or your team's time. So if you don't have high enough gross profit margins, right, that's going to be your revenue minus your direct costs, then that's going to be an issue for you. But oftentimes business owners are a little bit better at tracking those direct costs and making sure that they're pricing appropriately to make sure that they have some margin. However, where you might get hurt is on all of those indirect costs. Those are costs that you can't necessarily attribute to a specific product or service. Sometimes you might have heard them referred to as overhead costs. So these are kind of the extras, right? The office supplies, the software that you're paying to service all of your customers, right? Or to schedule your phone calls or whatever it is, your admin assistants that you can't necessarily divide their time out between your clients, right? All of that is kind of this overhead indirect expenses. And that's oftentimes where things can balloon out of control. And oftentimes the other thing that happens is that we reinvest all of the money in our business, right? If you're running a business with inventory and you are making money and then it feels like you're just using that money to buy more inventory, right? That can create this cash flow crunch. So there are lots of reasons that we could be in a situation where your revenue might be good and growing, but your profit isn't keeping up. So how do we fix this problem? Well, I want you to think of your business as a bucket. Okay, stick with me here. So your business is a bucket and you've got money that is coming in. So that's everything. That's the water that's coming in to the bucket is the money coming in. All right. Now, what happens if you have a bunch of holes in the bottom of your bucket? Those are your expenses. Now, if you have teeny tiny holes, not as big of a deal. It's going to just, maybe a little bit's going to drip through. But if you've got these big gaping holes, you're not going to be able to hold on to much of that money, right? It's just going to go straight on through. So even if you were to increase the amount of money you make, i.e. increase the amount of water going into the bucket, it's still eventually all going to drain out. So we need to fix those holes. So what's one way to fix this problem? Well, you want to institute a cash flow system. And that might be something like Profit First. It's a book by Mike Michalowicz. It's very popular. It's a way of dividing your money into different buckets. I have my own, but a little bit of a different take on Profit First. I do what's called profit planning. It's my own signature method of managing my cash. You can check out more about that, but what I like about it is that it also helps you save up to reinvest back in your business. You can save for your future. You actually have money that's set aside just to save for things that are fun, right? It's a little bit broader than what Profit First does, but whatever you do, ultimately it's going to be important to divvy up your money into different buckets and then not touch the money that is for something else. So whether that means it's money that you set aside to pay your taxes or to pay yourself, you aren't dipping into that to pay your ongoing bills. And that may force you to figure out ways to save money on those bills, right? We don't want to pay ourselves last. We want to be a priority in our business. You wouldn't work for somebody else for free. Why would you work for yourself for free? So make sure that you have a cash flow system that will pay you. And if you want to see what I use for this, check out this video next. In this video, I go through how I use Relay Business Banking to separate my money automatically. So it's really, really easy to do. You can set it and forget it if you want to, and it's going to help you reach those savings goals without dipping into it to pay for bills and making sure that you are paying yourself and setting aside money for the things that are important to you. So I'm always a big fan of using tools to help you. This doesn't have to be all up to you. You don't have to do all of this manually. So find the tools that exist out there. Relay is a great one to start with if you don't have anything like that, and utilize that to kind of put the guardrails in place so that you can reach those goals. Now, the other thing that can become an issue, even when you set up a proper plan where you're setting aside money, it's those irregular or unexpected bills that come up that can really throw you for a loop. So add that to the fact that a lot of businesses have inconsistent income. And if your expenses also aren't consistent, what are you supposed to do then? So again, I want to talk about my profit planning because it allows you to save for a rainy day. That's the R in profit. And it allows for you to save for reinvesting back into your business. When things happen, maybe when you want to take advantage of an opportunity that's really great, you want to buy a new educational program, you want to hire someone, whatever it is, you have the money set aside to be able to do that. And you don't have to dig into your normal daily expense budget to pay for those things, right? So definitely go to jamietrull.com/profit plan. That's where you can actually pick up my free spreadsheet that actually helps you create your profit plan. And there's even a video tutorial that goes with it that shows you how to do it and how to think through how much you want to put in each of these different buckets and what types of things you should be saving for. And then, like I said, Relay Business Banking or something like that can be really great to be able to implement your profit plan. Now, the other thing that I would recommend you do, just so that you have line of sight on some of these things, is to actually sit down and do a cash flow forecast. And I'm not talking about a cash flow statement. A cash flow statement is looking backward. A cash flow forecast is looking forward. It is looking at what is coming. So I typically do that weekly. I look about 8 to 10 weeks into the future, and I think about each week, how much revenue do I expect to come in? And what expenses do I expect to go out the door? And so I can look and see like, okay, well, my insurance payment is happening. That only happens once every 6 months. And that's coming out 3 weeks from now. So instead of that surprising me and all of a sudden I don't have enough money to pay myself, I can put that in the schedule and then I'll be able to see the full picture of what's coming. And you can even build in a little bit of buffer too, just to make sure you're not going to create a cash shortfall. Because what happens when all of a sudden we're surprised is we don't have the same options that we would have had we known that was coming weeks ago. Right? So right now I have more options. I can try to bring in more revenue or go collect some outstanding invoices to cover that. I can maybe delay some expenses or try to reduce some of them. I can change around some of the timing of different things. But flash forward to 3-4 weeks from now, there's very little that I can do at that point to avoid that cash flow crunch. And now it means I'm probably going to be reducing what I can pay myself so that I can handle this cash flow and I don't put myself in a bad situation by taking too much money out of my business. And another reason, and this is a little counterintuitive, stick with me, but another reason that you may feel broke in your business, even though revenue is coming in, is that you're growing really fast. And again, that sounds counterintuitive, but think about it. right? If you are growing really fast, you may have, more and more work to do. You might need to hire more people. You might need to buy more inventory, and you may not actually be getting paid on that until later down the line. So for example, if you're a service-based business and you have to hire a few more staff and they're doing work for clients, let's say, and then you bill the clients in arrears, and then you have to collect on those invoices, you might have had to pay your staff weeks before you actually make the money from the client. And that can create a cash flow crunch, even though you may have more clients than ever before and your margins might be great, right? So it's a little counterintuitive. Similarly, if you are in a business that has inventory and you're growing and you're trying to stock up on inventory, then a lot of the money coming in, you're just reinvesting back into your business to buy more inventory. And it may never feel like there's actual cash coming out of it. It's just this, constant reinvesting. And that's another reason that it's really important to set up a profit plan to make sure that you're carving out enough money to actually pay yourself too. You need to have that planned in there so that even in the midst of that growth, you are being able to reinvest, yes, but also being able to be compensated for the work that you do. You don't want to keep, sending it down the line, say someday I'll make money. Make money now, right? Take money out of your business now. That doesn't mean that you don't want to reinvest to grow, but 100% growth versus 0% to you isn't a good formula, right? At least make it 80-20 or something like that, where you're still reinvesting, but you're making sure to take a piece of that cut along the way. You have bills to pay, right? Unless you're independently wealthy, you probably need that money. So make sure to make it a habit, because when you don't, and I've seen this happen with business owners, when you don't make it a habit, you might think, oh, I'll pay myself, a year from now when things are better. And it will continue to roll. And there are business owners who, I kid you not, are like 5-10 years into business and have rarely, if ever, paid themselves. And that is shocking to me. Shocking. Maybe they took a little bit of money out here and there, but for the most part, it's all just being reinvested. And that's great and all. But y'all, we're humans. We got bills. Pay yourself. Please, 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 please pay yourself what you deserve. And I will tell you, the real trap is thinking that more income equals less stress. We often think that we're going to solve this problem just by working more and more and more and making more money coming in. That is a recipe for burnout unless you have fixed that leaky bucket, right? So don't just try to put more in, because you're just going to burn out. You're going to get exhausted. You're still going to feel like there's not enough left at the end of the day. Fix those profitability problems first. Then you can go turn that faucet on and fill up that bucket, but only then. Which brings me to that mindset shift I mentioned earlier, which is really, really key in all of this, which is that you don't need to earn more. You need to manage your money smarter. Now, again, if you're in the beginning of business and you don't have very many clients and you're not bringing in much money, okay, sure. You need to focus on figuring out what are you offering in the marketplace? How do you sell that thing? But if you are making money and still not having enough left at the end of the day, then this is more about managing the money in your business than bringing more money in, right? And until we figure out how to manage it well, bringing more in is not going to solve the problem. It's just going to burn us out. Now, if you want to get more into the strategy of this, if you're like, heck, yes, I would love to be able to make more money without having to constantly be working more, bringing in more sales, then I need you to go and check out my book. It is my very first book ever. I would love for you to pre-order it. It comes out officially October 21st of this year. However, it is available for pre-order, and pre-ordering is huge, huge, huge for new authors like myself. It makes a really big difference. So go to jamietrull.com/hidden profit. There you can see we also have some awesome pre-order bonuses worth over $300 for you to grab just by buying the book. You don't have to do anything else. Just buy the book and then come over and tell us you bought it and put in your receipt number, and you will get all of these bonuses. And I'm super, super excited about them. And I'll tell you that my heart and soul went into this book, Hidden Profit. It is all about finding the profit that's already hiding in your business, making little tweaks that can add up and compound to a huge difference in your business and in your life. So definitely go check it out. I'm so, so proud of it, and I really hope you read it. And also make sure to check the next video, which is 5 places your profit might be hiding, because that is a great complement to this video right now. I'll see you guys later.